Good morning, traders. Today is Wednesday, January 11th. My name is Charles, and this is the Pirate Traders live stream. All right, well, I thought today, I know most of you don't really need to hear this, but for those of you that do, I thought I might start with the process of how I got to where I am before I explain to you how I see the markets. So on Friday, we had this breakout of balance. Okay. And then we got continuation of that with short covering on Monday that pulled its way back down and then closed here at the low of the day on Monday. So that left me with a signal that what the market is trying to do is it's trying to pull back and repair the weakness that it's left behind on Friday and then find support around that balance area high. Once it finds that support, I was looking for some kind of like capitulation event, some sort of liquidation where the market would start panicking and all the buyers who had been buying up in here would have gotten squeezed, giving those stronger hands, longer term swing trader type of buyers an opportunity to get in, looking for continuation, looking for that bigger move as a breakout of balance. So what happened yesterday was just, quite frankly, there's no other way to put it, just completely confusing to me. All day long, the market was not doing what it was supposed to do. There's only supposed to be two things that would have happened yesterday, either a continuation of the momentum out, more short covering, or the market comes back to repair that weakness and back test that high. And so all day long, I sat in disbelief and confusion as the market continued to build momentum to the upside. They just kept pushing the market higher and then bringing in new buyers. Pushed it up, pushed it up, pushed it up, pushed it up. And then they just spent like 2 hours hanging around in the upper half of the range up here. And I kept waiting and waiting for the market to come back to the fairest price to do business. But they didn't need to come back. They had people that were willing to buy up here at the higher price. So by the end of the day, what I thought was going to happen was I thought we were just going to rotate around in this range, that all these weak hands that have been pushing the market up will finally get squeezed and will just go sideways. But what did the market do instead? It spiked. At the very end of the day, it pushed to a higher price and it literally closed at the high of the day. A spike is a clear signal from the market that it is bullish, that there are buyers who want the market to keep going up. So at the end of the day yesterday, the way I closed my brigade stream was to tell everybody the only thing that could make sense to me, the only way I could make sense of this market now would be to use that spike and the spike rules that it gives us to give me a perspective of what is happening. What should have happened, what I thought was happening, isn't happening. I'm wrong. So if what I thought was happening isn't happening, what is happening, right? The spike will be the answer. It will tell me what is happening. What do the spike rules tell me? Well, that brings us to this morning. So now I open up my chart this morning and I say, what is the spike rules telling me? Well, we're opening with a gap up. Opening above the spike is the most bullish signal the market can give you. There is no way the market can tell you it wants to go up better than spiking up at the end of one day, closing at the high, and then opening the next day with a gap up. So the first order of business for the market this morning, and now the market is open, the first order of business is to try to fill that gap, to try to work its way back down to yesterday's high, which is at 39.42. If it cannot do that, if it cannot get to yesterday's high, if there are new buyers willing to buy up the market up here, that is extremely bullish. And I must ignore my previous thought processes. What I thought was happening is not. What should have happened is not. So the opposite is happening, which is somehow, some way, the shorter term hands have created the momentum to continue the breakout. Okay? So my focus this morning, I would say, is quite simple. Because of that, because I realized I was wrong about one thing and the new signals were giving me new information. Okay, so if we pass back through the opening price now, that is the beginning of the gap fill attempt. So they opened and they just immediately went up. So now if they come back down through that opening price, you know they're trying to fill that gap. Okay, so once they try to fill that gap, then what happens? Can they get to yesterday's high? If they get to yesterday's high and they find support there, bullish. Anywhere above there, bullish. If not, we look to test the base of the spike. That's where everything changed. That's another really important level where everything happened to give us this new signal of what the market was doing. So that's the next test. If we don't find support at yesterday's high, we look to test the base of that spike. If it breaks, guess what? Well, then I know what should happen is happening. We are still heading down to repair this weakness. We still have not had an opportunity to let those stronger hand, longer term players enter the market. And so that becomes the next most likely thing. So that simple process allows me to have a very, very clear and simple way to look at the market today. They're most likely going to try to fill the gap. And when they do, if they find support at yesterday's high, I'm bullish. If they don't, and it breaks the base of the spike, I'm bearish and monitoring for continuation lower. Can they repair the first week reference? If so, the second and the third. That simple. Bullish above 42, bearish below 37. And the gap fill begins. Let's do it. It's time to make some monies, honeys. So first order of business, trying to fill the gap. Can they do it? So we're now looking for this node right here around the halfback. Let's call it below 39.60 to act as resistance to try to fill that gap. The overnight inventory is still net long, right? There was more buyers in the overnight than sellers, and they have not taken profits yet. So as long as this resistance holds, and we have not gotten those ticks back to the zero line, they're still trying to fill that gap. Looking for a gap fill, can they do it? Good morning, Nap. $6 million man. Chillin' with Dylan. Inquisitive. Robert. Tim. ES. Trade Monkey. Johnny. Jay. Tom. The other Jay. Scalping Strategy. Nico. Pavel. Blue Shirt. The other John. Mike. Hello, hello. All right. Well, so far, ladies and gentlemen, we have ourselves a gap and go. I am officially bullish as long as we remain above yesterday's high. So what that means is, if you're thinking about going long up here, you're taking a very risky trade. You are buying the high with good taper, with the overnight inventory still net long needing to pull back. So I am not necessarily recommending you buy the market up here. But I'm saying this is the first bullish signal that we would get if the market was going to gap and go. It would try to fill that gap and fail, and it just did. And that is bullish. So if you can accept the risk, that is what I see. And I will remain bullish even if we pull all the way down to 42. Okay, we got good taper, but a weak high. Looking for support now at the overnight high, 39.60. The high remains weak, but we're getting good taper. So once again, we're back in a situation where passing back through the opening price now would trigger an attempt to fill the gap. So we are looking for the market to hold this support above 39.57. Kathy says resistance level. I'm bearish. Well, that's the thing, Kathy. We're at a resistance level, and yet the overnight's not even taking profits. Only people doing business up here are buyers. I don't generally see that as bearish. High remains weak. Weak again. Weak again. This must be a bot. It's got to be an iceberg. Yes, sir. Okay, so now this node, this very large node right here at 39.69 is the next major resistance. It should take some grinding to poke through there. And the next target to the upside is the repair of the poor high that we left behind at 39.73. If they're able to get through this resistance at 69, we're looking for a repair of that poor high at 73. And then we begin what we call monitoring for continuation to the upside. So if we find new buyers up there, can we get up into the gap that we left behind at 85? If we find buyers in there, can we fill that gap? Okay, one step at a time. First, we got to get through this resistance. Let's begin the poking. Another weak high, once again, in need of repair. Bonjour, Jean-Marc. Bonjour. All right, so the first poke up into that resistance left another weak high, but good taper. So do we have support now for another poke? This is one of those scenarios where it's buyers versus sellers, right? The resistance is the sellers, the support is the buyers, and they're just going to push the market back and forth, and they're going to fight one another until one side breaks. And we don't really know which side's going to break, right? Are the buyers poking at the sellers and making them weaker and weaker with every poke, getting ready to burst through? Or are the sellers building up resistance to poke through the buyers? We don't really know. The only clue we have is the momentum. Spike up yesterday says the buyers are in charge. Gap up this morning says the buyers are in charge. Gap and go says the buyers are in charge. Support at the overnight high says the buyers are in charge. So if I had to guess right now who's going to win the poke, I assume it's the buyers because they've been in charge up to now. Poke it up. Weak again. Tim Robbins, was Monday's high considered a poor high? Yes, sir. You can see I have it marked right there on the chart. Like, I'm a magnet. I'm pulling on price. David V, why is the high weak? It is weak because it was all sellers. Only 84 contracts traded at the high, and all 84 were short. So that means they only filled the ask, not the bid. And we just consider that weak. If the buyers didn't even get a chance to get filled there's probably still buyers there waiting to get filled. And then the fact that it happened twice in a row, it was like 62 contracts or something like that before. And then once again, they poked up and stopped exactly at that level and didn't even let any bids fill the second time. Now I know it's a computer that's doing it. No humans that quick on the trigger. So if it's a computer doing it, why? What's that computer's plan? Well, probably it wants you to put your stop right above there. You see the resistance, you go short. Where are you going to put your stop? Right above. Making it weak. All right, so once again, that's twice in a row now. They poked up both times. They did run out of buyers, but it was a bot. It's weak. So now we're back to testing the support. Do we have it for another poke? Mike Johnson, welcome. Thank you for the sub. Serta, is it distracting trading to live stream? Yes. So much so, I'm changing the way I do it starting in February. All right, time to look at those ticks. See what's happening with the momentum. So it's the same thing, right? The price pushed above the overnight range up here, but we never pulled the ticks back to the zero line. So that means that the people who are selling up here are more likely to be longs from the overnight that are taking profits and less new sellers. Well, passing back through the open price, that increases the odds. We're looking for a gap fill. But let's wait and see what happens at the zero line first before we freak out. Okay. So it looks like we're running out of new buyers here. They're trying to hold these ticks up, but there's sellers starting to step in. So now we're at the question, do we turn previous support? Remember, this area right here was acting as support, trying to poke up. Does it now become resistance? Let's take a quick look at the Q. See what's happening there. Ooh, okay. So the Q tried to fill its gap and couldn't quite do it. Man, that's very close. You could almost consider that to be weak, but again, it's a when what should happens doesn't. They came that close to filling their gap and they couldn't do it. Well, if they can't go down, what are they likely to do? So even though it's a little bit weak, it's actually kind of bullish. So then they got above their overnight high. They are now bringing in volume and spending time above the overnight high. That is bullish. So I would remain bullish on the Q as long as you're above the opening price. 11,323. Can they hold it? ES is saying no. So we did turn that half back into resistance, and we did pull back below our opening price. So that increases the odds. The market is once again trying to fill the gap, trying to get down to 39.42. As I said, I remain bullish. I am not bearish. Quite the opposite. I think if we try to fill the gap, we'll just give the market a chance to bring in more buyers. It will only be if yesterday's high at 39.42 breaks that I would then begin to change my bias. Scooball says the sellers are not doing a good job. You're right. They've tried to fill that gap like 4 times now. And there is always buyers waiting, but the buyers can't get anything for it either. So we'll play some tug-of-war here for a little bit. Okay, so far today, all the signals have shown us the momentum is to the upside. If, and this is only if, we don't know yet, if the ticks were to start to trend lower, if they were to now push below the 0 line and stay down there, that would be the first signal we don't have this momentum anymore. It would be a signal this was just enough momentum to get us back to the overnight high, but then we looked above it and failed. But if they can hold the ticks up here above the 0 line and keep it going, well, then it gives us the opposite signal that we do still have the momentum. Showing what Dylan says, 14-point range. Dylan, it's not the size of the range. It's the momentum of the break. Top Gun says, are we waiting for tomorrow's news too? No, sir. Not when we're thinking about day trading today. The market is going to make moves today. That's what we're focused on. Can they fill the gap? Or is it a gap and go? You very, very rarely have these types of signals of momentum and then nothing happens, right? You very rarely have a spike up and a gap up, and then the market's like, well, that's it. We're going to go nowhere. They're either going to fail and pull back down and come crashing down, or they're going to succeed and keep it going. Highest probability, anyway. But it does appear they need to have some tug of war first to figure out who's going to win. All right, so now we had resistance at the halfback, which held twice, and we're starting to get resistance at the opening price. So that is a little bit bearish to see. If the ticks follow suit and the ticks break the zero line and start to head lower, I will think the market is going to try to fill that gap, heading back down towards 42. We should probably just look at Bookmap and see which side has the larger number of stops, and that's the side that's going to lose. Oh yeah, the sellers have been getting stopped out way more than the buyers. Boy, this is fun. You got to love a chop zone on a gap. So we're back to playing the game. All right, well, this was resistance. Can it now become support? Oh, something else I wanted to mention I forgot this morning was that talking about being able to change your perspective. To me, the balance area high is like somewhere in here, right? And so yesterday all day, I was thinking we didn't really test the balance area high. But then when you look at the candle on the daily candlestick, I mean, that's what's so nice about changing your time frame. You know, when you're zoomed in watching the market move intraday on a day, it might seem flawed in some way, but then when you zoom out and look at it as a full day's range, you're like, oh, okay, no. I mean, that's what it did. You know, it broke out of the balance, it came back, it back tested it, and now we're going. It's really weird that it was all short-term traders that did it, but they did it. So, of course, a breakout of balance likely to lead to excess. Not today, obviously, but in the days to come towards 4,000. Fun times. All right. Well, now the overnight high is acting as support. So the next question is, can they get enough support to head up and repair the week high at 39.67? If so, we got all this resistance. We got to poke on through. Schoolball says a lot of stops above. Yes, sir. It's a good point. Got to be a lot of traders that were looking to fill that gap today. I suppose when we started to pull back below the opening price, that probably would have been where they were starting to look to get short. Where would they have been putting their stops, I wonder? And how are they feeling right now? If they were selling below the opening price, heading up towards their stops. Fixing to get squeezed. All right, well, this dance will continue. They're now turning support into resistance. The tug of war shall continue. Ugh. So again, just watching those ticks. Can they keep them above the zero line? Can they keep bringing in new buyers? Pavel says NQ has a poor high. Let's take a look. No, sir. It's a good high. And it's initial balance to the upside, which is bullish. So the Q looks much better than the ES here. They've successfully pushed above their overnight high and held that overnight high. They've brought in volume and spent time above there. And they now have their initial bounce to the upside. So that is all bullish to see. And same as I said before, I would remain bullish as long as you're above that opening price. Uh-oh. The ticks are starting to break. So again, different markets here. ES, let's go take a look. ES is starting to pull back below that opening price. Those ticks are starting to break the zero line, so that increases the odds in my mind that they're trying to fill that gap. Once again, I remain bullish as long as we are above 42. I think the dips will be bought. But it looks like they're trying to do a little dippy. Anybody got any questions for me while we watch the chop? Market questions? ES Trade Monkey, why is the sky blue? Trick question. It's gray. I'm looking out the window. Gray AF. PW says, how do you determine the difference between if it's going to fill the gap and it's just a pullback? Well, I suppose the point that I'm making when I say I'm bullish above 42 is I see a fill of the gap as just a pullback. Does that make sense? So the idea is there's a lot of traders that are going short because they know there's a high probability we're going to test 42. And there's a lot of traders that aren't willing to go long because they think we're going to test 42. But both of those traders change their mind when we get to 42. The people shorting now to try to fill the gap take profits. They become buyers. And the people who have been waiting, the people that want to go long, but they're like, I'm not going to do it up here because there's a gap. Well, they'll be waiting to go long there too. So the question, so to me, it's still bullish as long as we're above that level, and all it is a pullback to give those buyers a chance to get in so that we can go. But the question is, do we need that pullback or not? Can we bring in those buyers up here and just go without them and then turn them into FOMO, right? Which starts the momentum, which starts that rocket popping higher because they didn't get in because they were too scared, and now they have to chase the market. Is that what's going to happen? Right? That's what a gap and go is. You just get that momentum, and then it just starts to set off those rockets one after another because the people were too scared to get in. Or do they get their chance? Do they need to pull back and fill that gap? We don't have the buyers up here. We got to pull it back. That's the question in my mind. And I cannot answer it. Not yet. The tug of war continues. Thomas, how long have you been trading? When do you get consistent? The important question is the second one. I was trading for years and I didn't get consistent because I was doing it wrong. Because I just didn't understand how you trade. I didn't understand what being a trader was, what the process of learning to trade was. So I just spent probably 3 years, almost 4 years, just bouncing around from one guru to another, learning one instrument to another, trading crypto and futures and individual stocks, the mega caps, the low caps, the penny stocks, trading the FX, trading every different signal, everything under the sun. I tried it all because I didn't understand how you become a trader. There's a process to it, right? There's a system. And I didn't know what that system was. So I spent years searching for it. So I don't really think there is a correct answer for how long it should take somebody to become profitable. It's about how long it takes them from when they get the right information, from when they're actually being told the correct things, and they're actually taught what the process is of developing a strategy. For me, I learned that from Jim Dalton. I would say it was probably somewhere in the ballparks of about 6 months from when I first started learning from him to where I finally sort of cracked the code and was able to become consistent, But it's not about how long it took. It's about how long it took for me to get the good information. Because you can waste a lot of time on noise and a lot of energy. Mike Johnson says, what are your longest term outlook thoughts? I know we trade what's in front of us, but what do you think the market will do the next month, quarter, year? Yeah, it's a fair question, and I'm happy to answer it. Although, Mike, you must take it with a grain of salt. And no, I have no edge on a longer-term time frame. I'm certainly happy to make predictions and explain where they come from, but I'm not really any better at it than anybody else. So just keep that in mind. I suspect we're going to have a sideways year. I have a feeling it's going to look a lot like this right here. Again, I'm no expert, but that's just what I feel like is going to happen. I feel like the only way we get back to the stonks only go up world of a straight up bull market heading towards all-time highs is going to have to be some major macro change, peace in Russia or something, there's no way to just like magically end inflation, but if you could magically end inflation or something like that, that's what it's going to take to make a big move. So what I think is going to happen in the interim is a lot of what we've been seeing. So it'll be a lot of like rotating and balancing in a tight range for a long period of time, then a massive break, then a tight range, break, tight range, break, range. I think it's just going to be like this, but bigger picture, we're really just going to go sideways this year. I don't think we'll make it to the all-time highs. I don't know if the low is in for the year or from last year. We may need to make a new low. But I think whatever happens is going to be a lot of sideways. That's like big picture, right? Near term, over the next week or two, I think we're going to head up and test this resistance, which will be around 4,000. And it's been acting as resistance since the all-time high. So again and again and again, the buyers have worked so hard to get, oh man. The buyers have worked so hard to get up to this level and then been very viciously smacked down for their efforts. They worked so hard to get up to this level, very viciously smacked down for their efforts. Well, we did it again. We worked really hard to get up to this level, but this time was different. This time we didn't just immediately get smacked down and have this huge break lower. This time we came up and gave it a second poke. And this poke was very different than all the other pokes. All the other pokes, they literally ran out of steam right at the high, like right at that trend. Boom, nothing. But that very last poke, we were able to get through for a little tiny bit. So I suspect there's a good chance we can get through it on this next one. In that same concept, it's a semi-permeable membrane. The more times the buyers poke at it, the weaker and weaker it's becoming. So maybe this next poke is the one that'll break through. But I don't know. We just got to wait and see. Stetzel's 02. Do you talk much about your entry philosophy? Do you only take the highest probability setups with the lowest risks, or do you sometimes buy breakouts if the situation allows? The answer is yes to all of your questions. Yes, I do talk about my philosophy. I talked about it this morning. Right, I talked about the gap fill philosophy that, when the market opened, it opened right at the open and immediately started going up. So my first philosophy was not to trust that move up because they didn't even try to fill the gap. And so then I said, for me, what would trigger an attempt to fill the gap would be passing back through that opening price. So when the market came back down and it went through that opening price, I got short the market and I put my stop above the high at the time, looking for the market to try to fill that gap. I put my take profit down here. They came back up. They stopped me out. So then I knew I'm on the wrong side. Tried to fill the gap and they couldn't. Now I'm bullish. So now I'm buying support, looking for continuation to the upside. But if I'm going to buy support because I'm bullish, I have to accept that this is one of those annoying trades where I have to accept a lot more risk. Because if I put my stop anywhere in here, inside the gap, I could get stopped out and the market could still go exactly where I think it's going to go. So you'll recall when I said I was bullish up here, what did I say? I said, I'm putting up the green banner. I am bullish up here, but I would not suggest you buy because I'm bullish, as you will have to accept the risk of a potential gap fill. I am okay with that from my experience level, so it's acceptable to me. A trade setup that I would not suggest for you is advisable for me because I have a different experience level and a different understanding, and I'm able to accept the risk. I won't get upset. I won't get squeezed. They could come down here and they could spend 3 hours grinding down here, and they're not going to squeeze me. So I can take a riskier trade. And you can too. Just buy the e-course. Michael, how long after the gap can FOMO survive without getting fed some more excitement? Not that long. That's the thing about momentum. It will shock you how far they can push it, but they can't push it forever. They just can't. So the momentum will always come to an end. And if the only reason you got to a new price level was because of momentum, well, then not because of like a change in the market, well, then you're going to have to come back down. But there's no way to guess how far they can push momentum. All you can do is keep looking at the signals. Do we still have it? Are the ticks still above the zero line? Do we still have, a trend or whatever? But you can't know when it's going to come to an end. At least I've never figured it out. I'd be a much richer man if I could. All right. Well, with that, I'm heading off to hang out with the cool kids in the brigade. So I couldn't get to all your questions. Remember them and re-ask tomorrow, or just join the brigade. Then you can ask anytime. I will just say nothing has changed in my opinion here. We just created another weak reference to the upside, adding another magnet up there. So I remain bullish as long as we're above 42. But I just keep saying it. If these ticks continue to trend lower, we will need to fill the gap. We will. It's just like if we don't have the buyers up here, which is what the ticks breaking below zero and staying below would tell us. It would say we just don't have new buyers. If we don't have the buyers up here, we will probably have to pull back to get them. But I would encourage you not to get too bearish as long as we stay above yesterday's range. Okay? There's a lot of support in here. The buyers will magically, poof, show up. So don't get bearish below there. Don't get bearish until you get below there. Okay? With that, I will say goodbye. Members of the brigade, let's set sail.